Welcome to another Indxx Insights Podcast, where we invite thought leaders from across the ETF industry to share their views on interesting topics. Today we have a special guest, Inkoo Kang, Vice President of ETFs at Grayscale Investments. Inkoo, thanks for joining us.
Thanks for having me. I'm excited to be here.
So maybe we could start by just talking a little bit about Grayscale. How did the firm start and how did it get to where it is today?
So Grayscale Investments, we are one of the world's premier crypto asset managers. Crypto is what we do, where we spend our time, our kind of principal focus as an asset class. And our goal is to deliver clients with the tools they need to access the asset class. About 10 years ago, Grayscale got its start with Bitcoin. Really with just Bitcoin. We created the first investment vehicle of its kind, providing access to clients for Bitcoin. That was known as the Grayscale Bitcoin Trust. It went through this product lifecycle, a really interesting product lifecycle where it started in private form, kind of offering access to Bitcoin in this regulated vehicle to accredited investors. But from its sort of origination, its design was always intended to kind of progress through specific product stages and ultimately be available to public investors and to the entire kind of accessible landscape of investors in the form of an ETF. Back in 2015, it was accessible in public markets in the form of OTC markets for the first time. It became an SEC reporting company, and in January of 24, it finally kind of completed its uplisting as an ETF onto the New York Stock Exchange, and it's the vehicle we know it to be today, GBTC, as an ETF. But along the way, we've been really focused on expanding access. That's really what our focus has been. And from a product perspective, that's been around Ethereum as an asset, Solana as an asset, continuing to kind of grow our clients' ability to get exposure to the entire ecosystem around crypto in the form of single asset products as well as multi-asset products. But that's really Grayscale in a nutshell and kind of where we started. Fast forward to today in 2025, we are a firm with a family of product offerings, 20 plus, covering the major single tokens, kind of in the top 20, top 30 X stables in the crypto ecosystem, as well as offerings that provide access to broad exposures in the form of like a large cap offering or into sectors and themes, and really kind of creating more precision around how our clients are able to access the asset class.
Great. So you mentioned actually a couple of different cryptocurrencies in your response there. Why don't we just start with the first two, the two largest, which are Bitcoin and Ether?
Yeah.
Can you maybe just tell us a little bit about those two, how they became the two largest, and frankly speaking, the differences between owning them in an ETP structure versus owning them outright?
Yeah, it's a great question. So Bitcoin and Ethereum are probably the two assets that are most widely known, whether you're someone who's been following the asset class for quite some time or whether you're a bit newer to the asset class and kind of whether you're just starting to get educated or just starting to kind of look at some of these exposures and the crypto ecosystem. But Bitcoin, in short, is a global monetary system, and it's an alternative monetary system to kind of everything else that exists today. So Bitcoin's a really unique asset. Bitcoin is the world's largest cryptocurrency today, by some measures, and by a wide margin. In very simply put, Bitcoin is a emerging alternative global monetary system. That's kind of what it is. It is often referred to as digital gold. And the reason why it's kind of received that moniker, it carries a lot of the characteristics that really good store value assets deliver. Its use case in portfolios have started to become kind of widely followed and kind of studied at this point. But it is the number one cryptocurrency in the ecosystem today. It's probably the most well known. It's the first, and it's quite a unique asset relative to many other cryptocurrencies. To touch on Ethereum really quickly, Ethereum's differentiated. It is the first of its kind in its own right. It is, the way I like to think about it, the modern day tech stack. It is a software platform. It is referred to as kind of the kind of the pioneer in what we know to be the smart contract platforms ecosystem in crypto today. But what that really means, it goes back to that term I used, tech stack. It is a platform that allows pretty much any code that users want to deploy, deployable. It is kind of the ultimate modern day software platform. That's really what it is. Double clicking on those two in particular. So today, they are probably by far the most widely followed two cryptocurrency assets. And you mentioned access in the form of ETPs. And I think that's a really interesting point that I want to get to. So Bitcoin and Ethereum and crypto has been accessible now for the last 5-7 years, and the progress of that accessibility has come a long way. There was a time back in 2017, 18, you kind of had to go to offshore exchanges, or you had to kind of go through loops to open an account at a certain exchange, and you kind of were engaging directly with these exchanges to trade, and you weren't quite sure, where those tokens and how they were settling. And so for us as an asset manager in the space, and speaking kind of for the ETF industry, the ETF wrapper. Speaking of kind of technological innovations, I think we kind of underappreciate the ETF wrapper in that context. The ETF wrapper is probably one of the greatest technological innovations ever. The most important aspect of that is it absolutely democratizes access to almost any exposure you can think of, right? You know this well, and so it's no different for crypto, and that's exactly what happened in 2024 with Bitcoin and Ethereum. So Bitcoin ETPs became available in the US in January of 24, and Ethereum ETPs became available for US investors in the ETF marketplace in July of 2024. The main differences are essentially what the value prop of the ETF wrapper is, which kind of comes back to that access point perspective. The ETFs have made access to Bitcoin and access to Ethereum super easy, super convenient. It removes all of the operational hurdles with touching the tokens directly, engaging with these crypto exchanges directly, ownership of a wallet, maintaining that wallet. It removes all of that, right? Now, Bitcoin exposure, Ethereum exposure can sit right along your S&P, your international equity, your fixed income, other alternatives you might have going on, and it just fits right in. There's nothing to do other than go about the normal way, the normal way you would for any other exposure that you're accessing via the ETF. The other thing that I think is interesting is, there are certain asset classes, and I'm not saying, Bitcoin and Ethereum are that example, but the ETF wrapper for Bitcoin and Ethereum have brought a lot of liquidity to the ecosystem. So the trading volume that we've seen over the last 12, 13 months that these products have been in market is really incredible. And that speaks to the adoption, how efficient the market has become around these exposures. It speaks to how quickly those ecosystems have grown and expanded, the types of users that are involved, from the kind of trading and kind of tactical side of things to the asset allocator side of the world. Of course, there's retail involvement and kind of self-directed involvement. We've seen the adoption curve of these products grow at a rate that I think has surprised everyone. So all of that has added to the fact that you can get into and out of Bitcoin exposure with I hate to say almost no friction, but very little friction, with the ease that you would almost any other exposure. It's accessible during US market hours, and it makes it really easy. So, that is probably the key difference, right? You don't have to go on exchange. You don't have to deal with the nuances with crypto itself and the technology that kind of comes with accessing the tokens directly, and the ETF wrapper just delivers it right to you.
So you talked about the adoption curve. What do you think is really driving this demand and driving this amazing growth of adoption for Bitcoin and Ethereum, and eventually probably more?
I think there are several factors. First, Bitcoin and crypto in general has, both in absolute terms and relative terms, and what I mean by relative terms is in risk-adjusted terms, have delivered investors with a really compelling return profile. And a return profile in absolute terms and a return profile in relative to the risk they're taking on with that asset. So it is, by many accounts, and there have been several years over the last decade where Bitcoin in particular is by far the best performing asset. And that's cross asset across the entire spectrum. So that as a factor has led, it has led many investors to kind of ask ourselves, okay, what is this asset? What's going on here? What's driving returns? What's driving volatility? Does it make sense for me? Should I be kind of tracking this asset? Does it need to be part of my portfolio? So there's, part of that adoption curve is the education, the involvement, kind of, we're using this term at Grayscale of the 0 to 1. A lot of our clients, a lot of the people we spend time talking to, they're at a place where they're at 0, but they're taking the steps to think about what it means to go from a 0% allocation to something like a 1% allocation. So certainly it's historical returns, it's kind of forward-looking prospects as an asset, has made for Bitcoin in particular to be an asset that everyone is sort of really, really looking at. And of course, the ETF, the introduction of the ETPs have played a role in that, right? It's become super accessible. Like we talked about, it's become something that that fits right into the normal course of business of what a lot of institutions are doing today, what a lot of retail is doing today, kind of across the entire spectrum of investors. It's become really, really accessible. So I think that's one. The second is, for me, markets are really fluid. They're ever evolving, and especially today, I think we live in a world where there's kind of the technological advancement aspect that Bitcoin represents, the blockchain technology, the digital gold. Is it a better store of value than kind of others today? I think that's driving, especially as a new asset, it's driving everyone to take a look. And then, of course, events that we've seen kind of somewhat recently. Of course, the new regime we have in the U.S. There seems to be a very pro-crypto kind of backdrop for the asset class, development of the asset class, adoption of the asset class here in the U.S. But not so long ago, if you kind of remember the regional banking crisis, right? The idea of a monetary system with no central party that is decentralized, that moves cross-border, is open 24/7. It really stood out during a period where, again, we were having issues kind of across the globe with some of these institutions. So we're seeing lots of things happen in the macro backdrop, the regulatory backdrop, and just again across investment portfolios and kind of the approach to investment portfolios that is opening a lot of eyeballs to crypto.
So what you're saying is it's really a multifaceted desire for crypto
so.
that's really driving all of this.
Yeah, I think so.
A number of
I think
different
that's
reasons. Right. So all of that said, Inkoo, what is really driving the demand and the amazing adoption curve that you talked about for Bitcoin, Ethereum, and eventually, other coins that are going to be coming in, hopefully in an ETF wrapper?
Yeah. I don't think there's any one single factor to what's driving adoption. So I'll mention a few things that come to mind. The first one for me is where I'd start is probably in both absolute terms and relative terms, the return profile of the asset class, in particular Bitcoin, going back historically and the prospects looking forward. If you look at Bitcoin in both absolute terms and on a risk-adjusted basis, it's been one of the best performing assets in the last decade. And there are several years in there where it's the best performing asset by a significant margin. So I think over the years, just sticking on that point, it's opened a lot of eyeballs to investors saying, hey, what is this thing? Does it fit in my portfolio? What is happening? What is going on? Why is this asset such a stark or outperformer relative to everything else? And same thing goes for Bitcoin since its inception. And there's a few aspects to that, right? For Bitcoin in particular, this goes back to the hyper uniqueness of the asset, right? And for Ethereum, kind of a similar approach. It's kind of representation of true blockchain exposure as the tech stack, as that software platform. So these return profiles, again, historically speaking, have driven a lot of eyeballs and a lot of engagement.
So what you're saying is basically just like any other disruptive technology, performance takes off and people start paying attention to it because of the return profile. But underlying all of that is something that is disruptive and really, game changing in terms of a specific sector or industry or use case.
That's
right?
right.
I mean, that's really what you're getting down to.
Yeah, I think that's spot on. And looking forward too, right? There's a lot of things that are happening, I think, in the macro backdrop, the regulatory backdrop, that are, again, continuing to drive adoption, engagement, interest in the asset class. So going back to Bitcoin in particular, there have been events in not so distant history where it's really shown its merits as an asset, right? If we think about the regional banking crisis here in the U.S., Bitcoin, no central parties, totally decentralized, no reliance on any kind of intermediaries. It operates 24/7, cross-border, right? These are qualities and characteristics of this asset that really showed proof, right, against something like what was happening with some of the regional banks here in the US, that showed proof that, like, hey, this is an asset that matters. In the US today, we have a president in the US who seems to have a lot of pro-crypto policies. And whether it's for the adoption of crypto in the US, the further development of crypto in the US, things are happening that seem to be really supportive for the asset class, right? So again, these are certain things that going forward, I expect to be driving continued eyeballs, continued adoption, continued growth for the asset class.
Do you think globally what's happening with regard to certain countries with their currencies, balance sheets, printing of money, do you think that's driving things beyond just the US? So we're talking about just on a macro global basis. People are just concerned that, the currencies that they hold, whether it's in specific currencies that have undergone, huge devaluation, South America, Argentina, and other countries. Do you think that's driving it as well?
I think, short answer, yes.
Okay.
So that idea of kind of currency debasement and the solve that an asset, in particular Bitcoin, because of the characteristics around its scarcity, its locked supply cap, that have provided value relative to some of that stuff happening globally. Absolutely, Bitcoin represents an alternative to global monetary system. That's what it is, right? And similar to kind of what we just spoke about, it's really starting to show its merit as that type of asset.
So just as a quick refresher, how many Bitcoins can actually be mined and how many have been mined to date?
Yeah.
Approximately.
So the total supply cap for Bitcoin is 21 million. That is written in code. And the scale of which Bitcoin has kind of created today makes it such that an input like that in the code is very, very, very unlikely to ever be altered. So that is a pretty finite supply that's capped. Today, I'd have to kind of I want to double check my numbers, but today, my understanding is that roughly 90% of that total supply of the 21 million is in circulation. And of course, there's all the kind of anecdotal evidence of historically that a lot of that supply has been lost, right? Whether that's from early adoption or things that have happened with exchanges or supply that just we have not seen move from a wallet perspective in years. So, what the true free float number is on that for Bitcoin, there I think are some different methodologies of how to approach that accurate number. But generally speaking, that is probably the number one aspect about Bitcoin that makes it a really unique asset and a really interesting store of value asset, which is that scarcity.
For those of the viewers who aren't familiar with it, there's a lot of scarcity out there with Bitcoin that have also been lost, like the individual. I always think about the individual who threw his hard drive out and he keeps trying to find it in the local town dump.
That's right.
And every time it surfaces in the news, Bitcoin keeps increasing in price. And so, when you read about the story 6 years ago, the Bitcoin on that hard drive was worth, I don't know what it was, 10 or 20 million bucks or 50 million bucks.
That's right.
And now it's, I think, well into the nine figures.
That's right.
So,
and now there's a bit of a national holiday, with the first purchase of the pizzas using Bitcoin. So there's plenty of stories like that. You're absolutely right.
You mentioned a few times that Bitcoin is almost like digital gold.
Sure.
And like gold, we've talked about it a little bit, that it needs to be mined. Can we talk a little bit about mining? How it works, companies that are involved, how the process just all comes together?
Yeah. So just to set the base case on mining, it's important to lay the context of the consensus mechanism for which Bitcoin is built on and that the protocol relies on. So Bitcoin deploys what is referred to as a proof of work consensus mechanism. All that really means is that the ecosystem supporting the blockchain needs to expend work or deliver work in order to participate in kind of the potential for the rewards associated with the blockchain. That's probably the kind of the simplest way to put it. To use your gold analogy, you need to get the machines together. You need to get the power together, right? You need to spend the manpower doing the digging. Not to make gold mining overly complex, but in order to have the potential to find or kind of mine the gold, right? So very similar to Bitcoin and the proof of work consensus mechanism. Therein comes mining. Mining is essentially the activity that happens 24/7 that supports the continuation of the blockchain. It is the activity that verifies transactions on chain and adds each kind of unique transaction onto the blockchain that is Bitcoin. So, I'm sure you and our audience has heard or sees writing around kind of the ledger, right? This blockchain ledger. So that is continuously ran since the inception of Bitcoin, and the mining activity itself is what is maintaining that ledger. Going back to the proof of work thing, the simple equation is energy in, right? Rewards out, right? That is the simple equation for mining, right? So miners today, it is a global industry that has computational power like you wouldn't believe, right? Some of the stats I've heard and some of the numbers around the machines that are built specifically for the algorithm that backs Bitcoin. They are very complex, specific machines built solely for the purpose of engaging with that blockchain, right? There are the computational power that the entire kind of network around Bitcoin in the aggregate, it is an unbelievable figure, right? The terminology there around hash rate and exahashes, like it gets relatively technical, but some of the numbers I've heard around its corollaries to the computational power of the kind of the global cloud industry, right? Like this is the type of scale that is backing Bitcoin. So for us, Bitcoin mining, very simply, plays an absolutely integral role in the longevity, the security of Bitcoin, right? So for us, it's an industry that we keep an eye on, that we spend time thinking about, that our teams spends time doing some writing around, and it's an industry that will continue to be around as it supports the asset.
Yeah.
So.
At the end of the day, the industry couldn't continue to grow and satisfy the demand for Bitcoin and other cryptos without mining continually adding to the supply into the system, correct?
That's right. That's right.
But all of this, as you mentioned, requires a lot of energy usage.
Yeah.
And I'm sure a lot of us have seen and heard, that some of this energy is not necessarily clean energy, but that a lot of miners are also trying to set up in areas where they can utilize clean energy, renewable energy, steady state, kind of low cost energy.
Sure.
Can we talk a little bit about that? Because, we've heard a lot over the last few years about how clean energy sources, hydro and others, have become even less expensive than traditional fossil fuels.
Sure.
So all of this seems to be coming together when we talk about mining, right? Because mining is, again, the whole industry is disruptive.
Yeah.
But with the increased amounts of energy demand, a lot of that energy is coming from clean energy sources. So that's helping to change the global energy supply chain as well, correct?
Yeah. I think it's worth, again, I think it always helps kind of providing some context. But so I think the Bitcoin mining industry, the energy aspect of it, it does get a lot of attention. But and I don't want to make an apples to orange comparison here, but relative to some other kind of energy intensive industries, Bitcoin mining is a kind of a blip on the overall kind of radar globally. That said, it is very energy intensive. In fact, I would say, with how competitive the industry's become, right? That energy aspect, being able to kind of make that energy usage really, really efficient, and in some occasions as green as possible. That's been the trend. There was a report that came out in 22, I believe, by a kind of an independent organization who kind of does focus on the Bitcoin mining industry that had, I'm not going to quote the specific number because I don't remember it off the top of my head, but it was over 50%, which was the dependence on clean or green sources of energy as the input source across the mining industry.
Okay, and that was in 2022.
And
Yeah, today the trend is even greater. The numbers are even higher.
Exactly.
Yeah.
So I think in general, whether it's Bitcoin mining, whether it's ETFs, whether it's generally speaking, I think the world does a very good job of becoming more efficient, right? Because there's generally incentive to become more efficient, right? It's better for business, it's better for margins, it's better for kind of the world around you. So in the energy aspect for Bitcoin mining, I think we're seeing the same thing. And so I expect that to be a trend that maybe doesn't just go in a straight line to 100, but certainly a trend that remains intact, remains a focus, especially as you mentioned, because there are certainly sources of energy that are at least price competitive to traditional sources such as maybe coal or gasoline.
Or even less expensive.
Or electricity and the like, right?
So, and the prices keep coming down too.
That's right. And
clean energy
the trend for clean energy is going that way.
Clean energy keeps getting lower in price, and the mining rigs keep getting more efficient as well.
That's right.
And like you said, it does make sense from a bottom line perspective to have the lowest energy cost possible. And in a lot of cases now, from what I've read,
that option is green.
Yeah, that option's green energy.
Yeah. And you had mentioned one thing that I think is interesting to touch on. There's certainly been, and I think this is a growing trend as well, the thinking around how can Bitcoin mining play a role in kind of accelerating, I think maybe that's too strong of a word, maybe, but in playing a role in the kind of the continued adoption for green, right?
Yeah.
I think it's really interesting. I certainly see the use case for Bitcoin miners or Bitcoin mining kind of pools or large organizations that run big Bitcoin mining operations to play this kind of role in the aggregate kind of electricity grid and how that kind of plays, and because they're always running, right? Yeah. So there are times when off-peak and peak energy, they can take on, take off, and so it's an interesting thing. There's certainly people who are thinking about that, and so we'll see how that evolves. But I think that's an interesting aspect of the industry as well.
Okay. I'll say, so getting a little bit more in depth with miners, we actually partnered together and launched a product. We built the Indxx, and you guys launched the ETF that targets Bitcoin miners.
That's right.
So, having kind of laid the groundwork for cryptocurrencies general and mining and how it works big picture, can we just talk briefly about the mining product that you guys launched and how it targets the space?
Yeah, that's right. So MNRS, the Grayscale Bitcoin Miners ETF, launched at the end of January of this year. And for us, it was very simply everything we talked about, right? We wanted to deliver our clients with a solution to access the industry, to access Bitcoin mining as an exposure. Again, from the kind of opportunities over short-term horizons, but as well as the industry's role in Bitcoin and the Bitcoin ecosystem over the very long term. We think it's an exposure that matters. So for us, our approach was we wanted to deliver our investors with pure play access to Bitcoin mining and the Bitcoin mining industry. That was the goal, and I think we achieved that goal. So generally speaking, it is a relatively thin ecosystem of publicly traded names
for now, but it is growing.
That's right. That's right. And I think that trend, kind of to similar other trends that we've spoken about, is starting to go a certain way. Certainly today, investors have access to the Bitcoin mining industry through a vehicle like MNRS, right? And we're really excited. It's something that our clients ask us about. It's a bit of an equity exposure to Bitcoin, if you will. There's adjacent opportunities to Bitcoin. It's a very clean part of the Bitcoin ecosystem. From an equity expression perspective, it generally has this high beta type of exposure to Bitcoin as the reference commodity in which they mine.
Just like gold miners does with gold.
That's right. So it's not an exposure that I think clients will struggle with in terms of kind of understanding or kind of getting their heads around. And now there's a really easy tool, really accessible tool to kind of get that exposure on.
Yeah, and we talked a little bit about pure play exposure. What we mean as an index provider, and what you mean as well, is companies that are generating more than half of their revenue at least from Bitcoin mining related activities.
Yeah.
So what we did when we built that index, and it was really fun for us to kind of do the research and identify these companies, top 25 largest pure play companies that are Bitcoin miners.
Yeah, that's right.
And what we have seen, to your earlier point, is that the space continues to grow. I think we are seeing with the new Trump administration, favorable tailwinds there. So we are expecting to see more IPOs in the space and a growing list of potential companies to include in this index to get the top 25 names.
Yeah.
Talk about regulatory changes. I mean, what else are you seeing from a regulatory perspective that could help with the growth in the space? People have been talking a lot about Solana. What are you seeing that you feel comfortable talking about in that area?
So with crypto comes regulation,
Yeah.
right? And I think it's an evergreen topic in crypto, whether you're kind of at the protocol level, whether you're kind of working on the technology itself, or whether you're in the regulated product sphere, whether you are kind of an advocate on the mining side or for its energy usage, whatever it is, right? There's kind of lots of regulation with the asset class.
But that's true with any investment product, right? I mean,
that's
in the United States, there's going to be oversight.
Absolutely,
Yeah,
absolutely.
yeah.
And these are good things,
Yeah,
by the way.
yeah.
And I think from my view, I think the progress we've seen over the last 12, 24, 36 months on crypto, again, generally speaking, has been really positive. Speaking to kind of the ETF industry, if you will, so we're in a place today where we now have Bitcoin ETPs in market. We now have Ethereum ETPs in market, and the industry is moving forward. I think for Grayscale and for the other issuers who are in the space, but for Grayscale in particular, we are really wanting to prioritize growing access to the ecosystem and the asset class for our clients, right? And one of the best ways to do that is to continue to push in terms of product availability and exposure availability, ideally again in this wrapper that is provides so many kind of value propositions for the end user.
Yeah.
And that end user could be you or I, or it could be some extremely large institution, right? So for us, we're pretty focused on continuing to move down the cap spectrum.
Yeah.
You mentioned an asset like Solana, another kind of a smart contract platform that is doing lots of very interesting things. Kind of a competing asset with Ethereum, but both offer kind of unique value props. It's an asset that we have a very solid kind of long-term view on, and we're excited to kind of work with clients on. So again, I think that asset is representative of kind of the continuation of regulated product development for crypto.
Yeah, in the crypto space.
Yeah.
This is really great, Inkoo. I really enjoyed this. I will say that I have been asking all the questions here. So do you have any questions for me?
Well, first of all, I've enjoyed it as well, so thank you for having me on. But yeah, I'm curious. We spent a lot of time thinking about crypto and talking about crypto. You and your team at Indxx, what's your approach been like to the asset class? What are you guys working on?
Well, I would say we've taken a dual track approach at Indxx. The first has been direct exposure in an indexing wrapper to the actual cryptos.
Okay.
We built our first crypto indices back in 2018. We also built some very interesting multi-factor crypto indices in 2019. And what we've done since then, as the ecosystem has grown, we've continued to expand that line. But what we've also done is we've looked at, of course, the publicly available companies from an equity perspective that are out there.
Right.
So, we talked about miners. We've got our miners index. We have a number of other indexes that we are in the process of building, some for our own internal use and some, of course, with you guys and other clients in the US and globally. So that's been our approach. And I think it's been really interesting to see not only the growth from a market cap perspective in the coins and crypto itself, but just in the number of publicly traded companies and how well they've done over the last 5 years or so. We've been talking a lot about this being a disruptive technology. I almost equate it to AI. I equate it to electric vehicles. I equate it to biotech And if you look at cancer immunotherapy, these are things that kind of incubate under the surface for a long time. There's a burst of enthusiasm that kind of fades away, but the hard work doesn't stop.
Right.
These companies keep growing, they keep innovating, and eventually they burst through the public consciousness again, and they continue to grow and innovate. You think about the simplest example is the dot-com boom, right? People were going crazy in the late 90s, throwing money at all sorts of different companies and industries, and most of them didn't work out. But the story of the internet and the story of technology, that continued after the dot-com bust in 2001.
Sure.
And we are today in a world that has been transformed by technology, by the internet. And I really do think that in the next 10 or 15 years, we're going to look back and realize how transformational crypto was from an investment standpoint in investor portfolios. I think we'll look at AI, we'll look at biotech, we'll look at immunotherapy, we'll look at all these different clean energy and EV adoption too, and we'll realize how transformative those have been in the last 10 or 15 years as well.
Yeah.
So that was a long answer, but I'll say, yeah, we've taken a dual track approach to crypto exposure through the coins themselves as well as the companies around them in the ecosystem.
No, that's really interesting.
I'll say this has been a great chat, Inkoo. Thanks so much for coming on and taking the time out of your busy schedule here in Las Vegas. I hope you take some time off. I know you've been working really hard. Take some time off to enjoy the city and have a safe trip back. And again, thank you. It was really a pleasure.
No, I really loved it. Thank you for having me. This was a lot of fun.
So thanks to you all for listening and watching as well, and see you on the next episode of the Indxx Insights Podcast.